following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. We're going to start out the show like feeling good, Lewis, just like we usually do, and we're going to take a look at the DAX index. As you can see, the DAX has not participated to the upside like we have here in the S&P and the Dow Jones and the S&P E-mini and the NASDAQ. So we backed off. As you can see here, I'll put up the shorter-term version of this so you can see what's happened just over the last few days, where we did have the breakout, and we've come back to test this line several times at this 11,740. But that just leads up to what we want to talk about up right now. There are, I think this is the seventh day up in the NASDAQ. That's an outlier event. Anytime you get past 7 or 8 days, you're in an outlier event. It could go anywhere. The record is held by, in the commodity markets, the record is held by sugar and silver, 22 days in a row without a correction. Silver did it twice. Sugar did it twice, 30 years apart. So it's a very rare occurrence if that happens, but it can happen. There's no question about it. I wanted to talk just a little bit about the gold and the euro, because we've had a sort of a minor, we've had a pretty good move from the upside from what we were looking at. But the main thing that we want to be watching here is if you're going to use a trailing stop, let me just show you what's happening in crude oil. Now, this is a current thing that we're watching in crude oil that looks interesting, and that is once the market explodes out of point C, as you can see here, we had a really nice move. So we would expect more. We would expect a 38% pullback, and that's all we've had so far this morning. We've only been able to pull back about 35 points. Excuse me, folks. That's indicative of a market that wants to be very strong. Now, if we were looking at the gold market yesterday, after we had the bottom formed down there at 12.17, 12.18, we only had one 38% retracement, and that was only a $4 move down from the high. So the only corrections we've had over the last 36 hours in gold have only been $4 an ounce. That's sign of a market with a lot of strength. Now, at any time, you could get a retracement of $7 or $11. It would still be bullish. But if you're looking to buy breakouts, what you want to be doing is you want to watch that price when it pulls back to that $4 in gold. Then if it breaks out of the 1242 that John Logan talked about, a great place to put your stop, because it should not go back down below that. So you're looking at a risk of around $5 trading gold, which is a $120,000 contract, and that's really good leverage and good risk control. Now, in the euro, we had a move of 120 pips off the bottom so far, and the biggest correction we've had so far has only been 30 pips. So watch for about a 30 or 40 pip correction coming in at a 382 of the last low, and that will tell you where it should hold. That's how you use a trailing stop. Just take your price from the last 38% retracement and move it up to the 38% retracement level. If it goes below that, in this case, it would be down 50 pips in the euro. You exit it and then look for another buy signal by using the ABCD patterns into a Fibonacci number. So that's what we're looking at on some of these things that we're doing. One of the things is when you're following these things like that, if you have a position and you're watching it, you don't have to watch it all the time. Just put your limit binders in, to let them know that this is the thing that you're trying to do. It has another great advantage of doing this during the days when you're doing this work. It takes your mind off to the S&P that you got stopped out of 10 minutes after the open trying to short it. That I did on Monday. But Tuesday and Wednesday were really good days. We're going to see what happens here on Thursday, so we'll go from there. Anyway, Monday was a perfect setup for sale on the 9 days, yeah, you're right, in an outlier event in NASDAQ. So, and it's showing no appearance of a top. I'll get into that in just a minute. That'll be the next thing I want to cover, of course, is the E-mini S&P, but we want to watch this, closely because I will say this is not a beginning move in the stocks. I mean, this is so reminiscent of 2000 and back in the days of the old dot-com bubble. Let me just show you a chart here from Doug Casey that comes from the Federal Reserve. It shows the confidence index, and you can't trade this, of course, but this is why stocks are where they are, is because there's a lot of confidence. You can see that elliptical red circle there. That was the election night low, and bada bing, bada boom, we're off to the races. And, we got this S&P up near the 23 and change level. So it's also, moving out to the upside. So this is the kind of pattern you have to see when the top comes in. That's why I'm saying this is not a consolidation move that some people are talking about. Sure, the market is quiet. That's unusual compared to how it was when we were in 2000. We were having some really big swings in the market in 2000. Some of these dot-com stocks had, like WorldCom and Global Crossing and a few others. What was that one from CDGI or something, that pharmaceutical company from, I can't remember what the name, CMGI, I think it was what it was, yeah. And those companies were really getting hit. Sycamore Networks was another one. But the others were holding up relatively well. But many of those stocks, went tapioca. They didn't make it through the debacle that saw the NASDAQ drop 87% during 2000 to 2002 when it finally made the bottom. But like they say, real estate, it's location, location, and location. And if you're looking at location now, the NASDAQ is approaching 6,000, as they told us on CNBC today with Joe Kernan talking about he's looking for the day when the NASDAQ hits 6,000. Well, he doesn't have to wait very long because it's 55 and change or something. I don't know where it is right now, but it's pretty high. Anyway, we'll see what's going on. Now, let's take a look at what happened to the stock market yesterday. This is the E-mini S&P. Folks, this is just normal stuff. I mean, this is just mother, God, and country stuff. In fact, I actually took a buy in this darn thing. Look at this. You had a beautiful ABCD structure. You pulled down 10 points. The last correction that we had on the 14th was 9.25 points. The one on the 15th was 8.75, within a half a point of that. And then you start to go, and there was just virtually no heat during the whole time. And we got up to that ABCD pattern, which came in at 23.51. And what you would be expecting now, all of these corrections we've had over the last few days have been between 9 and 10 points. So look for a correction in the S&P, 9 or 10 points. That would take you down to about 23.41, and that would be one that would look very interesting from that side. So we'll see. Yes, we could see 7,200 in the target. Yes, for the NASDAQ. Yes, 7,200, and I want you to keep your medication handy because it ain't going to happen in my lifetime. Okay, let's take a little break here.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we were talking about, looking at retracements in the euro and the gold. If you're in the euro position, we haven't had any more than a 20-pip correction since we started after about 7:30 yesterday morning, but 9 o'clock New York time. So only 20-pip correction. So I would move your stop to 106.10. That would give you 80 pips, which is just under $940 or something. So put your stop at 106.10. That would be the biggest correction, and it would be more than 78% of the last correction that we had. But if we get strong here, this thing could have some pretty good legs. We're looking at possibly the same thing in the gold market, but that's what I would do, is move it up to the 106.10 level. Now, the other thing that's important is I'm giving you these numbers. I'm showing you what I'm doing. Folks, in order to really take advantage of it, do the work yourself. Like Twentyman says, defy human nature and do the work yourself, because if you do, you're going to reap great benefits because you have an idea of what the market's doing. It never really does anything different. It does it a little bit different, but really not different. And what I'm saying is the percentages might be a little bit lower or higher, but it's still going up and down. And if you're watching expansions and contractions, it's going to give you a pretty good idea of what you're doing. And another good advantage of doing that, it'll prevent you from trying to pick a top in the S&P, which when the top comes, you're going to make lots of money because it's going to give you plenty of time. The one thing we know for sure, with 100% certainty, the shorts are absolutely scared to death. We see that all the time. Yesterday, open interest with this big move, 100 and some points in the Dow Jones. The market, the open interest dropped in the Dow Jones E-mini. The open interest in the NASDAQ was up like 100 contracts, which is virtually nothing. So the E-mini is still adding open interest, but not at a great rate. But the Dow Jones and the NASDAQ are the two that are most susceptible here, because if we see any really big drop in open interest, on another big up move, then that's going to be further indication that we're looking at something like what happened in silver, back in April of 2011 when we hit $49 and went to 25 in a matter of 6 weeks. So it's going to be nasty, that much I can promise you. This market is no different than any other, whether it's 2000 or 2007. 2007 was a lot easier because it was quieter. There was complacency up there, much like we have now. But in 2000, it was just a once-in-a-generation thing because of the dot-com bubble. I mean, those guys were just like it was during 1929 pretty much, and that's why it gave so much of it back. I did want to mention the VIX index here because here is one that I want to talk about just a second. And you'll see here the VIX had a big up day yesterday. Now, that has to be someone with, the big kahunas that's taking protection on something. You'll notice that we've been down here. Our low was made on the 28th of January. We had a little bit of a rally, about 30% rally. Then we came down, didn't quite make new lows. And then yesterday we had a pretty good move to the upside. One more good move to the upside might be an indication that maybe something squirrely is going to happen here. But we've got 4 weeks to go on these options that we bought. We need to move above the January highs to really pay close attention to it. And as you can see, the VIX index, once it starts, people try to take protection. They never make it easy on them. So it's going to be interesting to see what's going to happen with this. But with just a month to go, it doesn't look like there's a whole lot of hope to this, except for today. If you come in today and tomorrow, if we get another thrust in the VIX index, then it'll be. And if we do it in the face of a up market, that's even more important because when markets act different than they're supposed to act, like when the markets go up, the VIX is supposed to go down. That didn't happen yesterday. If that happens again, that's trying to give you more and more information on what you're looking at when you're watching some of these things. So pay attention to it. So we'll see. We'll be looking at it. I don't understand some of the chats in here, but that's okay. I don't understand a lot of things. So let's take a look here at the E-mini again. Oh, no, excuse me. I want to take a look here at first Apple. We're up in the area now where we've completed the big ABCD. And what I'm watching here in Apple is there are two things. One, we have this huge gap that occurred from 21 and change to 26, a $5 gap that was due to earnings. But now we've made a double top. We have taken the top out of 2015. And as you'll remember, back last May when nobody liked this stock, they couldn't give it away. And now here it is at 135, and everybody wants it again. Boy, it's amazing how they change the rules for different fools, but that's the way it is. Anyway, this is a double top. We're going to fill that gap down around 122 level. The question is, how do you enter it? And the only way you can do that is go to an intraday chart using a half-hour chart and try to find a place where you can trade Apple, which is a $135 stock, and trade it for around $3 a share. And you can do that if you're looking at a half-hour chart. On a daily, you just can't do that. The other thing that you could do is if you really had a confirmation that this was going to be it, you could buy a put of, say, the 125 put that wouldn't probably cost very much, and it would be very interesting to sit in the I think John is asking about the U.S.-Canadian dollar. Is that what you're John, I will check that out. But we're watching this. I'm watching this crude oil. I'm a little bullish crude oil this morning because of the action we had last night. But crude oil is really not going to do anything until we get above $55 a barrel, in my opinion. Now, Bill Meridian still thinks we've got a chance to get into the mid-60s in oil. And I certainly think if our economy is moving like it is, it's probably going to mean higher oil prices. I would think that anyway, but, my thinking isn't always the way the market thinks, but I would take a look at that. What I will do is when we come back from the break, I'll put up the Canadian dollar chart and we'll take a look at it. I primarily, when I trade foreign currency, I trade the yen. the pound, the euro. Those are my three big ones. And then I also look at the Australian dollar, and lastly, the Canadian dollar. Sarah concentrates on the Canadian dollar because she has Canadian citizenship as well as U.S. citizenship, so she watches the Canadian dollar quite a bit, and we will keep an eye on that. No, Bill, he did not get bullish the market, Mr. P. Bill Meridian is just standing aside. He is not bullish the market. He's just standing aside. That's the main thing that you want to make in post. He's been wrong, but he certainly doesn't want to. He's not going to chase the market at this level right here, which is a sign of a professional, because chasing the market is like a dog chasing the car. He wins once in a while, but most of the time the car wins, and that's not a good thing for the dog. So we'll watch this unfold. But this is topping action in the market, folks. It's no different. I went through this thing in 2000. I did it in 2007 and all that same stuff. I mean, the one in 2000 was a no-brainer. I mean, that was just a flat-out no-brainer. But this one is going to be the same thing. It's got all the things there. It's going to be a no-brainer. But unfortunately, the brains are on the floor right now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back and we're talking about the Canadian dollar. I've posted the long-term weekly chart of the Canadian dollar. As you can see, we had the big break, and then the market rallied back over several months to complete a 50% retracement to the exact tick. And since that time, we have been in a relatively quiet trading range, and we're coming into what I think could be a low-risk buying opportunity here. Remember, when you're looking at a weekly chart, that takes just gives you an idea of what the longer-term picture is. But if you're going to be trading, don't go look at a weekly chart and then go down to the daily. You go to the daily chart to find where your entry will be. Entries on the weekly chart are really okay if you've got mega bucks behind you. But if you're trading with short sticks, you've got to be able to get your risk down to a very, very, very small amount. I've always felt that it's better to take a few small losses than one large one. But some people trade certainly a little bit differently. But if we get down to this 129.50 level in the Canadian dollar, that would be a really nice redrive to a bottom pattern, as you can see here. And it would be a very interesting pattern. In fact, very similar to the one that we saw in the euro, where you have several ratios coming together at the same time. And you would also have a ABCD structure from December down into mid-January. Then you had the perfect rally up to the 61% retracement at point A, and that would take you down to point B, which would be right around 129.50, which is 100 points from where we are right now. So my game plan would be to wait for that last 100 points to see if we're going to get to that level. But again, this is the fifth of the currencies that I trade on the Forex, euro being first, the pound being second, the Japanese yen being third, and the Australian dollar fourth, and the Canadian dollar fifth. And the Italian lira is 26 and still dropping. Okay, that was supposed to be some side humor, but it didn't go over. I don't hear anything but other than one hand flapping. So sad. Anyway, it was a 50% Gartley. You're correct, Marshall. Gartleys could be 50% as long as you have the ABCD structure in the move. You have to have an ABCD in order to have the Gartley. It could be a 382 like we had in bonds and in some of the other things that we've looked at, or it could be a 618, 786, any of those, and we'll see what's going to look at. So far this morning, folks, we've done exactly like we've done yesterday. The market didn't even back off. It backed off 9 points the last 2 days. We haven't done that quite yet. So keep in mind that after 9 days, that's an outlier event in the NASDAQ. You just don't see that. You just don't see that very often. But that doesn't mean you can't get 12 or 13. That's easily attainable with that. That's the main thing of watching it. One of the main questions that I get, the main questions, I got 2 emails about it yesterday, is what after the market goes to these levels that you weren't expecting, what do you do? Well, the first thing I do is I realize that the Dow Jones Industrial Averages and the NASDAQ have been the leading, promulgators of this thing. So the first thing I would do is I would look at the biggest stock in each of those indexes. And, of course, Apple happens to be pretty big in the NASDAQ, as you can imagine, which I've already showed you that making a potential double top. And the next one, if I go to the Dow Jones Industrial Average, I would want to look at that all-time favorite that we watch, which is Goldman Sachs, and I have it right here. And what I'll do is I'll go down to a 60-minute chart, and this is why I was asking yesterday if Goldman Sachs had got up to this. Hold on one second here. There we go. I want to see if Goldman Sachs can get to the 253 level. Now, that's up a couple of bucks. That would be a perfect 1.27 expansion from the high on January the 13th. And as you can see from that level there, we had a 3 drive to a top pattern, and the market broke, had a good 10% break into February, and then away it went. But that's neither here nor there. Remember, this stock was at 215 on election night, and it's had one heck of a rally. So that's the way it goes. But anyway, that's what I would be looking for, is to watch the biggest stocks in the index to see, what's going to happen with that. Because then if you see that, then you're able to really get a good idea of what you're looking at. But so far, when the market does top, folks, looking at the way markets acted in the past, and this one will be no different, we feel pretty strongly about that. That's the main thing that I wanted to keep in mind. But you'll see a big break in the market. It'll probably break 25, 30, 40 points or so in the S&P, and then in the blink of an eye, it'll rally back to 61 or 78. I would say 78 because the market has been so strong, and the shorts are definitely scared to death. All shorts who are scared to death, please raise your hand. Oh, I see there's quite a few of them in here. Okay, anyway, watch that. Another question someone's just asked me is how do I calculate these moves that I talked about in the euro and in gold? I'm going to bring up the gold chart this morning just to give you an idea of, we got a caller. God bless Charlie. Charlie, what can we help you with?
I sometimes feel sorry for you that you don't get a call like every minute, you know. Larry, you're doing a great job. We all respect you.
Yeah.
Hey, listen, you were going to talk about gold, but I've got USLV, and I'm trying to get a bearing on what's going to happen with with that and with gold.
Well, I am. You should talk to someone without an opinion, Charlie, because I have a really strong opinion. It's the same opinion that John Logan has, and my feeling is if we can get gold above this 1243, 1244 level in the next day or so, I think it's got a chance to really have legs. And silver is going along. I'm very bullish silver. I tell anybody that has any extra money every week, buy a couple of silver rounds because something's out there that it's going to be. It's just going to be, and they're beautiful coins anyway. I mean, even if silver backs off a little bit, they're still beautiful pieces to have. But I think silver is certainly the way to do it. It's referred to as the poor man's gold, but it's still pretty good. But I'll take a look. If you'll do me a favor, Charlie, if you'll just email me. Oh, you know what I'll do is when the break comes, which will be in a few minutes here, I will put up a USLV chart, and I'll discuss it when when we come back on the air. That way I'll give you an idea of what it looks like compared to the others. How does that sound?
Yeah, that's fine. I mean, I'm long on it, making about $100, so I'm just getting a feel for how high it could go, or if it could go down. And I'll listen to you on the radio, okay? Make it easy.
Okay, that sounds great. I'll put it up here a little bit. And if you need a chart, just email me at larrypesavento@gmail.com, and I'll send it out to you.
You got it, man. Thank you.
Okay, thanks for calling in, Charlie.
Sure.
Okay, we'll cover USLV at the break here, and we'll see what's going on. But we're going to take a look here at this gold. As you can see here, all I did from yesterday is to see when the market backed off. You know that it pulled right back to a 38% retracement. That was $4. The market went up. It backed off $4. And what did it do today? It did the same thing. So we've had three $4 corrections is all we've had. Now, we could have a much bigger correction at any time, but it will be a multiple of 4. It'll either be 2 times 4 or 3 times 4. So $12 would be the most you would expect, and that would take you down to the 1232 level.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're talking with Charlie up in the far northeast, and I hope he's not in too much snow. But we were looking at USLV, and as you can see, I posted a chart in here. This stock is in a strong uptrend. We bottomed in December, down at 9. We're now trading. We've been as high as 20. We doubled in price. We pulled back, made a beautiful 135 pattern at the 78% level. And the stock, if this stock gets above 17, it's got legs. It's got about another 69 cents to get there. But if it gets there, it's got a really good chance to make an ABCD structure that would take it up to about 24. Now, if you bought the stock, he bought it a week or so ago, what I would do, Charlie, if you're listening, is just put your stop in at around 15.30 or 15.29 per share, and you're in a risk-free trade, and let it rip. And one thing I would not do is I would not look at the stock every day, because that doesn't do any good. Just put your stop in and see what happens. Because someday it could have a huge gap up like we had in June, and yet it came all the way back down again. So watch that stock, but I would certainly not lose anything on it at this point, and that's the number one rule of investing. Once you've made a substantial profit, you certainly don't want to give any of it back. We're making new highs in the NASDAQ, which should not be any surprise to anybody that's been doing the same thing every day now for several days. So we'll see. The euro's still getting ready to move a little bit higher. We had a 20-pip correction, and we're coming back from that. And what else is going on? I still think crude oil's got legs here too, folks. If we can get the crude oil above this level of this last 1.618 move, which is around 53.80, that would give us a really good chance to see crude oil, attempt, breaking through that 54.50 to 55.100 level is what I would be watching. So keep a close eye on that. Would someone be so kind as to tell me the price of the high of Goldman Sachs this morning with the move in the market? I'm really following this stock at the 250 level. I'd like to see if we've got there up that much. But I believe the Dow is lagging a little bit. And it's amazing that the VIX index is up again. Somebody is taking protection, and believe me, it is not the neophyte trader. I can promise you that. Very few people trade that. Okay, thank you, Steve. I appreciate it. I was $21.95. Okay, thank you so much. Watch that Goldman Sachs there. There's a huge butterfly, 3-drive pattern and everything on the hourly chart. And that's been the leader of the Dow. And, of course, that's one of the reasons why I'm going to be, watching that very closely. I have not, frankly, folks, the reason why I'm doing that is I don't have anything else to base it on. I mean, it's gone to, and there's other stocks, I understand that, in the Dow that are doing this. But, you're looking at stocks like Goldman Sachs that are really expensive, and United Healthcare and, 3M, some of these other stocks, IBM, these bigger stocks are not making new highs, like we are in the banking stocks, with J.P. Morgan and stuff like that. So I'm watching to see what's going to go, what's going on. We'll see what's going on. Anyway, the main thing I'm, really focusing right now on the currencies. Now, another one that looks really interesting this morning, folks, is if we take a look at the dollar yen at this 113.50 level. We're trading at around 113.80 right now. That's been down now for several days. It's right at the 78% retracement level. We hit that a little earlier this morning at the 113.55 level. It hasn't really done much, but watch that, because if it can hold this 113.55 level, that is going to be a really interesting one, to pay attention to on the currency front. Now, that leads us to another problem. Well, I'm talking too much, I guess, but I guess I have to get this out of the way. That leads us to another problem, but a situation. If you're in the euro, you don't want to overload yourself with the pound and the yen unless you really have a conviction for it. And but you don't want to. Sometimes when you do these, you're doubling up. Like if you're long the pound and you're long the euro, you're double short the dollar, and that's you're doubling your risk exposure. So I don't particularly like to do that. In fact, I don't do it. But what I would do is, if I've got a huge profit, if you had a huge profit in the euro, you could also nibble at this Japanese yen as a way of adding to your position without too much risk exposure. So that's just another factor that we're keeping in mind. I think the two main things to watch today is if we can get this euro to close above 107. Boys and girls, this puppy is off to the races. I would think 111 would be the next spot. If it were to do it. The same thing in gold. If gold should reverse today, it's up a little bit, of course, but if we have more strength in gold getting above the 1245 level, it is good night, Charlie, and away she goes. As far as I'm concerned, I think it's got a really good chance, because those long-term charts on the silver and gold sure look beautiful. I mean, they really do. And not many people see it the way I see it, but, so far, it's been working, but, maybe it'll change in a day or two. But right now, it certainly looks really interesting. And remember, you can see $11 to $12 break in gold, and it'd still be very bullish. Now, if it broke $17, that would be unusual, but it still could happen, and then you'd have to reassess it, at that point, because if it breaks down $17, you're going to be trading at around $13.25. And you've got to, pay close attention to that, because the old low was at 13.18. What am I saying? 12.18, and that would be right at a 78% retracement. So, any of those, you have to prepare yourself for those possibilities. And all I was doing this morning was to try to show you how to handle it during the day using a trailing stop of some kind, by using these numbers that we call harmonic numbers, or numbers that repeat over and over again, because that's all the market ever does. And those are the things that you want to be watching as we come up to the day here. Well, we had a lot of talking today. I'm surprised I was able to do it all at one time. Now, this is the first time we've had this happen. We had a pretty big move in the S&P, but we did not make new highs in the E-mini S&P. We went up to the 78% retracement of last night's range, but we did that yesterday too. So the key figure to watch is 10 points down from the high. We had a high at 23.51. So if you'll watch 23.41, that should be pretty close to the bottom in the E-mini S&P today. That's all it's been able to do over the last several days is to make those, small little 10-point corrections. And if you'll take a look at this, you're going to be seeing where 21.41. Let me just put this up. You'll see it here really quickly here. You'll see that the 23.41 comes in from the high of the 15th. It'll be almost the same price. So that's around 23.40 is a high that we made back on the 15th. That was the big ABCD on the daily, 23.40, but they rewrote the record books and took it up to 23.51 using the oscillating oscillator. that they sometimes do when you're short a position and it goes against you. So we'll see what's going on here with some of these things. Okay, that is very unusual to see that. Yes, that's right. The VIX is at 1783 now. The VIX is up again today. That's hard to believe 2 days in a row after something like this. We'll have to wait and see. In order for the market to show any type of a topping action, we've got to have a big break. 25, 30 points minimum in the S&P, and then see what happens after that. But folks, I can promise you this: there's going to be so many chances to sell this puppy, you won't be able to count them. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're almost down our 10 points in the S&P. 9 or 10 points has always had the last 3 days. Now, if we go below 2338, that'll be the first time that we've exceeded any correction over the last few days. And remember, we've had 9 days up in the NASDAQ, and that is an outlier event, so you can expect anything to happen, and it usually does. I would suggest you focus on the gold and the euro, because I think these are the ones that are going to be pretty interesting to follow. If we can get this gold above 1244, 1245, it's really got legs. And what I'm doing, is if we get above 12.47, I'm going to buy it above 12.47 at 12.48, and then I'm going to put a $5 stop on it. So if it goes above 12.48 and comes back below 12.43, I will get out of it. The reason for that is that over the last 36 hours in the gold market, we've not had any correction more than $4. So it would have to correct more than $4, and it would be in a breakout zone. And if I'm really lucky, and I'll repeat again, if I'm really lucky, you're not going to see much trading between 23.48 and 23.52 or something like that, because it could be a valid breakout. And that's what happens when a breakout occurs, a valid breakout. It triggers stops, and away it goes. And it doesn't give you much of a chance after that. So that's how I'm handling it. Pay your money, take your choice. May the force be with you. But watch this level of 22 or 12.48, because if it gets above there, I'm going to be adding to positions, and I would like to see what happens at that point, and just go from that level and see what But pay your money, take your choice, as they say in the trade. Right now, everything's about as expected. Nothing really crazy happening. The bonds are still in the midst of a little bounce, but it's basically a DCB, so it's a dead cat bounce. But you don't have to. I don't think bonds are going anywhere but lower. They might have a little bit more to rally in here, maybe half a point or more. But the overall chart picture of the bonds and notes is incredibly weak. Have a nice day, folks. Amen.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.